Hello and welcome to The Note, coming to you from the vast Sibos banking conference here in Boston, where delegates have been hearing from Bill Gates. Now, the symbolism couldn't be greater. It's now exactly 20 years since Bill Gates sent shockwaves through the banking industry by saying that banks were dinosaurs that can be bypassed. Now, in the time since then, the internet has disrupted many other industries quite profoundly. But banking, not so much. It's still the same big banks in control of the market, issuing the same credit and debit cards. How did they do it?
Well, the banks are still around, and they've been around for 20 years. They've been around in many cases for 200 years because they're protected by bank licenses that are government issued. Therefore, there's huge barriers to entry to get into banking. There's compliance, audit, regulation and governance. All of that stops a lot of new entrants getting into the system.
Some of the innovators may underestimate the extent to which people want someone else to look after their money. I've got about $200 in my wallet at the moment, and that's roughly what I feel comfortable carrying, and I don't really trust myself to keep large orders of magnitude more money on my computer. I want someone else that knows what they're doing to look after it, and I think that's true for most people. The question for banks is, are they going to become a utility where a lot of the value-added services gets chipped away in the way I just described, or are you going to be able to use the new technology to compete on some of the value-added services as well as the utility services?
Now there's a lot of excitement about mobile payments. We can pay people using our phone, and most of the apps we use to do that don't come from banks. There's the newly launched Apple Pay. There's PayPal, shortly to be spun off from eBay. From Google, there's Google Wallet. More radically, in East Africa, there's a service called M-Pesa that allows people without bank accounts to pay each other money just using a mobile phone. And, of course, there's Bitcoin. Will these services finally threaten banks from the outside and bring down the incumbents?
If you look at the M-Pesa system in Kenya and M-Pesa in Tanzania, it doesn't use payment card rails. It uses a push mechanism that allows money to be pushed from the account of the sender, with the telecom firm in this case, to the recipient directly without the recipient ever seeing the sender's details.
So M-Pesa in Africa is interesting, but services like PayPal and Apple Pay ultimately use the existing rails of the bank's own payment system.
Well, technology is making a huge change to banks because they're moving into digital form, and therefore most banks are re-architecting their internal organisation and systems to be digitally enabled on the internet. That's a big change, but it's a disruption that's happening from the inside of the industry rather than from the outside. There are lots of new models coming into the industry from the outside, but as soon as they are successful, they're being incorporated on the inside.
And even the entrepreneurs introducing services for Bitcoin don't expect to displace the banks.
The keys that allow you to spend that money are digital, and someone needs to protect those. And so new institutions like Circle are playing a role as custodians, but there's no reason to believe, in particular as the sort of regulatory picture becomes clearer, that existing financial institutions, existing financial intermediaries wouldn't also be custodians of these new kinds of digital assets.
So, contrary to expectations, mobile payments probably won't disrupt the banks, although they still need to be very careful to keep themselves at the center of their relationships with the clients and not cede that to the likes of Apple. Also, a word of warning. It's very easy to be very wrong about the future of electronic payments. These are two electronic wallets that I was issued as part of a rollout of a new smart card scheme in Manhattan back in 1997. The plan was very simple. Your money resolved there on a chip. You put it into your reader, you press the button, it told you how much money you had. There was really no need to use cash. That was the idea. Cash was going to be made redundant. But people found they didn't want to carry another card in their wallet. Merchants disliked using it. Within a year, nobody was using it, and the whole program was discontinued. I still have $5 on this wallet. I'm probably never going to get it back. So many people, not just Bill Gates, can get it wrong about the future of electronic payments.